So everybody wants to be an investor, including me. Why wouldn't we want to invest? We want to invest in real estate. We want to invest in crypto and in the stock market. We all have different businesses, dreams, and ideas. We want to invest our money. The problem with investing is, doesn't matter what it is, anytime you invest your money, it's at risk. Now, there's ways to mitigate your risk. For example, having a business plan, knowing when and what your return on investment is, knowing exactly how you're going to use your money is going to mitigate your losses because you know exactly how you're going to use it. You can expect a return on investment. However, even with expectations and a really good business plan, there are factors outside of your control which may change your plans. You may end up having to take a short-term loss. You may end up losing everything. Ultimately, any investment is a risk. So the question is, how can you protect your liquid assets, your money, your cash, before investing it in blank? You fill in the blank. Whatever it is that you want to do. How can you protect your liquid assets? So I've talked to a lot of different investors in folks that are starting businesses in different industries. As you know, I facilitate financing. I'm the director of funding and senior consultant with Orange Financial. We are a business finance consulting and procurement company. We service over 12 business funding solutions. So with that service and my experience over the last 10 years helping business owners get access to funding, I've seen everything, from folks that want to, create a product or they're in the development phase on an app to folks that want to open up a restaurant, a barber shop, folks that are looking to make a major business acquisition in the multi-millions, all the way to folks that just need 20 to 50,000 to just launch and get started. So every industry throughout the United States. I've talked to almost every everything you can imagine, including investors, folks that are looking to, start buying and selling real estate or fixing and flipping, long-term rentals, folks that are looking to rent vehicles, cars, folks that are investing their money in crypto. And one thing for certain is that none of the people, or most of the people at least, that I've talked to over the years have done anything to protect their liquid assets. So when you buy a house and you're selling the house, or you have to have certain insurances to protect that asset. When you buy a car, you have to have insurance to protect that asset. There's certain insurances that you're required to have as a business owner: errors and omissions, general liability. There's so many different types of unique insurance that you are required to have. And ultimately, one thing about insurance is you don't like it or you don't love it until you need it. And then when you do, you're glad you have it, right? Because ultimately, if you don't have it and you need it, you're in big trouble. Now, there's one type of insurance that is not being talked about, that most people are just not aware of, that is not required or mandatory, and is a unique way of protecting your assets. And this is not something new. This is something that has been around for hundreds of years. The folks that created the Federal Reserve and the banking system, this is how they banked before the banks were created. And they continue to bank this way. And that is using whole life insurance with high cash value. And the reason why is, number one, when you put your money into a whole life insurance policy, you have the potential or the ability to have access to that money so that most of it remains liquid. So it's not stuck inside of a policy. And if you need to access it, you don't have to pay fees and penalties as you would in a retirement plan, for example. Number two, the money inside that policy is protected from any litigation, lawsuits, bankruptcy. Even the IRS cannot go after the money inside your life insurance. Number three, if the economy crashes, if the world economy crashes and the standard of currency changes, right now it's based on fiat, which is the dollar, right? However, if the economy changes and the standard that we measure money by changes to a gold standard or some type of cryptocurrency, the money you have in your bank account, in your checking and savings account, is going to lose all value. That means you don't have anything. The $1,000,000 you have in your bank account or the $10 you have in your bank account is worth absolutely nothing. However, inside a life insurance policy, that money will simply adjust to the new standard, whether it's the gold standard or some type of crypto, whatever it may be. So your money is protected. It's safe. On top of that, you have some guarantees on compound interest growth that is tax free inside of these policies. Okay, so it could be anywhere between 2 to 6% compound interest, guarantees between 2 to 3% plus dividends that you can anticipate on your money compounding inside that policy. And then you're able to take the money out of the policy through a policy loan, use that in your business, invest in your crypto, invest in your real estate, invest in whatever you want to do. But if your business or your investment takes a loss, technically your money was protected inside of the policy. You have to see an illustration to understand the power of compound interest over time. Too many of us are thinking short term and making short term gains and banking on investment opportunities. However, an investment is only as good as the return. And if there is an unexpected crash, if there is an unexpected turn of events and you lose your money, what are you going to do? If it's in real estate, if it's in crypto, if it's in the stock market, what are you going to do? You lost everything. Now, there's many people who have done that. I'll tell you this, people who have hedged their money, protected it in life insurance, are not experiencing those kinds of losses. Not in the long term. Maybe in the short term they are, but in the long term, the money is protected inside of the policy. Now, we can talk more about that, and I can show you designs and show you exactly what that would look like for you. But the next thing that you have to understand is that a whole life insurance policy is also going to secure a death benefit. And that's, number one, what it is. It is life insurance. Death benefit is legacy. That's generational wealth. That's money that you're going to leave to your future inheritance. And if you don't have children or relatives, it could be to your business. It could be to your favorite nonprofit, but it's generational wealth. It's your legacy. If the only person that you affect in your life is yourself and you leave nothing for others, then the buck stops with you. It doesn't matter if you're a multi-billionaire, trillionaire. If you don't leave anything for others, the buck stops with you. And what was your life worth? So folks, think about this. Really think about it and look it up. Research this. Whole life insurance, high cash value. The concept or strategy is called infinite banking. The Godfather wrote the book. His name is Nelson Nash. Look it up. Research it. You don't have to work with me. You can work with anyone you're comfortable with. But you want to work with someone who knows how to design these policies to your advantage so you have the maximum cash value. This way you have flexibility and you can leverage your money outside of the policy. Because the real money is made in your investments. The policy is simply an alternative banking solution. It's an alternative savings account, checking account. That's all it is. But your money's protected. It's going to grow compound interest. It's protected from economic failure, a changing of currency. This is how you protect your liquid assets before you invest in blank.